Chairman Powell, thank you for your great leadership. And I think you recognize that state and local governments are absolutely critical to our response to COVID, but also to our economy. It's been estimated, for example, that there are 20 million jobs in state and local government, that they contribute, state and local governments, 8.5% to national GDP. And we all know they're facing dire economic circumstances, projected 10% budget losses this year, 25% next year. How likely will it be for us to have robust recovery if our states do not receive additional and flexible fiscal relief, not a loan from the Fed, which increased their leverage, but fiscal grants to the states? How robust can our recovery be if this key sector is out of play?
Senator, I don't want to get too into individual fiscal proposals. Those are really for you. I've tried to stay at a fairly high level on this. I will just echo, though, that I think something like 13% of the workforce is in state and local government. A lot of the critical services that people rely on day to day are, provided at the state and local level. With balanced budget amendments, that means that balanced budget provisions in state constitutions, that means that when revenue goes down sharply, it can mean job cuts, it can mean service cuts. So those are all important things to consider in going forward.
Well, thank you. Secretary Mnuchin, I just want to make a comment because I made this comment to you repeatedly. That is, I do believe that within the coronavirus relief fund that we passed, you do have the flexibility to provide support for the states when it comes to lost revenue. This lost revenue was not anticipated in their budgets, far from that. And second, it is directly related to the COVID virus. If you go to most states, it is directly related. So I would urge you to relook, as you've done at PPP, and you've tailored that several times, look back again and reconsider the ability to use flexibility in this coronavirus relief fund. So that's just a comment, Mr. Secretary. Let me return back to Chairman Powell. Chairman Powell, we know that unemployment is going to be something that will be with us for a while. It's about 15% now. I've seen estimates as high as 20 or 25% next year. And yet our unemployment insurance programs are key to a date. They will end at a certain time. Do you think it's important for us to have the confidence and give confidence to people that they can still receive funds like this, even if the date is surpassed, the economy is still in disarray, states are still looking at 10% unemployment rates? Don't they need that certainty? So we'd have to build in some type of test, not a date, but a test for unemployment compensation?
Senator, again, that's a question about a specific fiscal policy, and that really falls to you. We try not to get into too many specifics. I will say, though, that the risk that I called out last week and that I've been concerned about and others have is that long periods of unemployment can really affect people's ability to go back to work because they lose their networks, they lose their skills, they lose contact with the job market. So I think anything that keeps people intact is probably hopefully in their job, but in the meantime, keep them out of insolvency and things like that. Should the expansion start later or take longer to get going, those are appropriate things for you to look at.
Thank you. Just a final point, Chairman Powell, that I think we're missing the boat once again. This is sort of like deja vu. I was here in 2008, 09, 10, and we leaped in to help the mortgage market with both feet, but we didn't help people avoid foreclosure. It seems to me that that's what we'll do again. Unless we have a fiscal program that provides resources to keep people in their homes, when they can't pay their rent, when they miss their mortgage payments, that'll put pressure on the mortgage community, and you and the Fed and the Treasury will rush to the help. Wall Street will get the help. Main Street will be left behind. There'll be, as there was in 08, 09, and 10, thousands and thousands of people without homes. And any economic recovery is going to be slowed by people in those conditions. So I would just ask whether you consider this fiscal response to the core problem. People can't pay their rent, they can't pay their mortgage, is probably the best response rather than filling in later.
Well, I think you're right. It's waves of foreclosures can undermine household finances, obviously, and or as a result, bad household finances are troubled. But of course, in this case, there has been some significant forbearance on that, and I think that's again something to continue to consider.
Thank you very much, Mr. Chairman. Thank you, Chairman Powell and Chairman Crapo. Thank you.
Thank you, Senators